Good afternoon, Scott Redler, T3 Live. Welcome to today's recaps. So we came in today early on. Futures are down about 13, 14 handles. Action last week was giving us some clues that we might get a break of this ascending channel, but you really had to have some risk overnight in order to maximize or make money from the short side. If you came in flat today and you're like, okay, I want to short the spiders, I want to see if I can get involved on this downside move, you were definitely frustrated because I would say within the first half hour or 45 minutes, we went to test that reactionary low from April 10th and we held above it and then we grinded the rest of the day. So there's nothing you could do about it, but there was some action in Apple and a few of the other stocks that we were talking about, tweeting about. So I'm going to get into it and just quickly give you the overview. So first things first, take a look at the S&P or the SPX. You will see that here is that macro trend that we keep drawing that we held once we broke this intermediate trend way back when. If you recall, we talked about rally under pressure right here. This was your rally in correction, not under pressure, and pow, nice move lower. Okay, this was about what, 4.5% off the highs. Then you had a reflex move back up to work off the oversold condition, and then things just started looking a little choppy. So today, what happened? Okay, we opened below this ascending channel here, but what did we do? We held that April 10th low. That was 1357. So right here, it was worth knowing that reactionary area, so you knew that it would be a good spot to cover some shorts into it and then see how we respond. So with that said, that's why we use a tier system. Everyone knows that I was short tier 2 overnight. I would have loved to have added below 137, didn't get that trade. So once we broke below 136.20, 136, I'm like, let me get down to at least 20, first thing on the open, I covered about half. Then I held half to see if there was a bigger trade there. Okay, and then once I saw the action, I was like, you know what? I don't know if we're going to just break that. So I got back to a small percentage, maybe 25% of what I had overnight just to stay with, to book some of the trades so then I could put it back on at a better time. And then today, there was a few trades, and guys are asking me to go over what I saw in JP Morgan, the positive divergence, which got me long it for cash flow. So that's what I'll do. So real quickly, if you go back to the chart of the SPX, you will see, first, before I even get to that, a lot of people are talking about this head and shoulders top pattern, which at this point, it's pretty valid that it's in the works. Okay, the question is, will it break the neckline? Because you have the left shoulder, the head, the right shoulder. This contained the rally. This was that retest. And now you really have like a neckline that somewhat is diagonal. So if you look here, you always bounce off the neckline first, okay? And obviously you go to the side like this and you could see it. And perhaps we see a day or two of inside action. Obviously, the market probably wants to get Apple out of the way before really figuring out if it wants to discount lower. But I would say at this particular point, maybe we get same way we came from here and retested this broken trend line. Sometimes you retest another one. So if you want to put this as a channel now, just so you could measure the move and see your participation. If you go this way sideways, I would say the longer the SPX holds below this area, which is now just say 1378, the more prone or the higher the probability that it then breaks below this neckline for what could be a nice juicy trade down to at least 1340, and then maybe even down to this area moving across here. But there'll be a lot of trades between now and then, so we'll see how much longer you need this right shoulder to build, because look how long this left shoulder was. Okay, and then the head was obviously so you might need more time. So anyway, with that said, I am short some spiders still, but I do have some longs, and one of the reasons why I went long JP Morgan is I want to show you the positive divergence right around 10, I'd say 15, 10, 10. I'm like, what, JP Morgan's trading off the lows. I'm going to give it a try around 42.10. Spiders are coming towards the lows. JP Morgan's low is 41.80. It's off of it. Let's see if it could materialize into something. And then there was another down move in the spiders, and I think I tweeted saying JP Morgan just got stronger into that down move, so that got me a little bit more, or gave me more conviction to buy some. So if you go here and you look at the chart of first, just say we'll go to the spiders here, so you could see it, because that's what I was talking about. So just real quickly, very similar scenario on the spiders. It right now held the low here from that April 10th. And sometimes you get a bit of a gap refill before you head lower. That's why I'm really not that short. But if you go to the 3-minute chart here, you will see that this is what's important. Okay, look here. This is a new low in the SPX or the spiders at 951. Write down on your piece of paper 951, new low in the spiders. Okay, and then also write down around 1018 another new low in the spiders. So here's a new low in the spiders, and here's a new low in the spiders. So between about 950 to 1020, the spiders was making lows. Okay, so now let's go to JP Morgan. JP Morgan, leader of all the banks, stock that I watch very closely. We were watching it to break this 43 to 42.77 area, which it did. It closed on the lows. Then it got down into the 50-day. This was the line that I drew this morning with Lindsay that I said could be buyable to look at. Okay, so that was the plan. Okay, so a lot of guys make fun of all my mannerisms or sayings. You have a plan, then you wait for the market to confirm your plan. And then when I saw that positive divergence in JP Morgan versus spiders, I said, you know what, the market's confirming my plan. If I want a cash flow cute long, here's one. So you go back to JP Morgan, and you remember I talked about 950 to 1021. Go to the 3-minute chart, and you will see here, look at this. JP Morgan opened at the lows. At 948, 951. I showed you the spiders making new lows. Right there, that's a divergence, right? Had a little bit of a move into the gap, came back down, and what did I show you around 1015, 1018? Spiders were making new lows again. There's 1018 on the clock. Look at this thing when I'm talking about it, okay? Right around here, 1018, or actually right around 1018 to 1021, it was still, showing strength. So you had the spiders making lows, and this looking much better. So that's why I said it's getting stronger in this down move. Look for a cash flow long. And if you were just, say, in tier 1 here, this could have got you to tier 2. Then on this move up, maybe take some off, 42.60. And then say I'm going to hold some. And then all of a sudden it went up to about, 42.90, which was a retest of this broken resistance. And you could have got flat if that's all you were looking for, or got back down to small and trailed it. Because that's basically what I did. So here is, this is where it showed you its face. This is where it said, wow, this is showing a positive divergence. I'll show you one more time. Here is 951 to 954 versus the lows here. You go to your spiders. Spiders, what did we just say? Here you go. What is this? 951. Look at the quotron making a low here. And then a little tiny pause. And then what did it do in this area? This was what? 1018. Right at the lows of the day. So you go back to JP Morgan, 1018, where are we? This is 1021, this is 1015, here is 1018. Are we near the lows of the day? No, we're well off the lows of the day. That's why I went on the radar, and that's why it showed a positive divergence and worked. Now, as far as Google on a daily chart, first high beta tech name to go to the 200-day. It held. It was a good cash flow trade. I'm not sure if it's going to develop the way it did last quarter, but you can now trade Versat. You go to the daily chart. I'll show you Google real quick. We talked about this was the 200-day, the last time it had a bad earnings report, okay, and held. This time it's traveled a big distance down, so first time it usually holds. So if some guys are long it, I would say, into 603, 605, take the trade. I don't think it's going to be as easy just to buy the 200-day like last time, and then look what happened. Okay, so we shall see. We'll measure the bounce along the way, and we'll see what kind of market action we have. But so far for today, it was a decent bounce candidate, and guys made money looking for a trade. And then you go to Apple. Apple, it was pretty funny. You had a quick trade off the open, okay, and then it got heavy. And guys on my Twitter, guys on the virtual floor, I'm like, you know what? I'm like, this 565, which is a double bottom, it just feels heavy. If it flushes below there, I think we go 552, 556 in a trap door because there's nothing in the way till then. And I was trying to buy options into that area, and I missed my option buy, but I bought the stock, so it was fine. But people are like, how did you know that area? Where did you come up with it? That was, oh my goodness, just from the charts. That's what we look at. We look at charts. So if you look at Apple here, Apple came in. Why did I pick that area? Because look, there was a gap here. You look at my quotron, the low is 555.75. The gap would have been filled at 552. That's why I drew this area this morning. in the morning call that you should be watching with Lindsey Bell. Okay, and then we rallied off of it, and it wasn't like this day. Remember this day, guys? There was a lot of opportunity, a lot of action. This day, not so great. But if you look at the 3-minute chart, there was a lot of opportunity. First, right here, if you remember, okay, this was your first move, okay, that we made some money with. Then it flagged, and then as it flagged, it showed a little relative weakness, came back down, tried to hold higher, right? And then, it just started to roll over, and then this is when I tweeted. I'm like, this gets taken out, be careful. So it broke through. I actually got short, made a few dollars short this, through this 565, came all the way down, went as low as 556.62 into that line that I drew, not this afternoon, but in the morning call in the morning. And then from there, it trended back up, gave you some nice action. I think I sold into lunchtime. I didn't have a blockbuster trade in it. I took it pretty small, but here was your low, made a higher low. I started talking about it right here, in the virtual floor when it traded above this W formation. So I got long around 564. I said I'm going to put a stop in at 561.50. Never went down to it, and then it trended up the rest of the day. Got a little frisky here, and I think this is kind of where I sold into this bar. And I missed a high, but who cares? Here you go. It's 12 o'clock. I was on my way to my spin class. I put an offer out when I left, and then I tweeted and said I'm done with it. And then I really did nothing until the end of the day. Just kind of crap, choppy, nothing. So we'll see how it goes tomorrow. Now I know Netflix came out with numbers. It was up $5 and down $5. I'm not sure where it is. It seemed like after the first read, it looked a little light. So we'll see how that goes tomorrow. Some of the other banks were off the lows, nothing crazy. So in this type of environment, you just take your trades. If you look for cash flow in an oversold scenario like we did with JP Morgan, you take the trade, maybe trail some. If you're looking for bounces, like we did with Apple, have a coordinated plan, make sure to keep it tight with stops. If you're looking for other trades, use the same type of systematic setup. So this way you make a little bit of money and you stay safe. And unfortunately, the market needs you to take some risk overnight. Same way from December 22nd to late March, you had to be long a portfolio of stocks because that's what the market was telling you to do in order to get really paid and not come in flat for cash flow. Yeah, there was money that way, but the real money was holding, which we tried to do with you until market went under pressure and we went flat. It was also the new quarter. Same way now, you saw the writing on the wall last week as far as leaders being sold, some faulty action, couldn't get back above 1385 to 1390. So, it was worth taking some risk short overnight into Friday. And if you did so, you got rewarded today. And if you came in flat because you don't have that risk, get over it. That's the way you trade. That's your style. Start taking a little bit more. Okay. As far as gold, some guys were asking me to take a quick look at it. I would say, still a choppy mess, guys. Here's that Fed day that was potent to the downside that engulfed this whole area. Since it's still trending lower, okay, more shortable than buyable. It did make a higher low today versus this area. So with the S&P making, actually the S&P didn't make new lows. It actually held the lows. So still, here's your mini range. The mini range, it couldn't get above. So this is your short-term resistance, bigger resistance. Here is your inside day. I didn't even touch it today. I just think there's better things out there. And it's still being controlled by this noisy mess of an intermediate downtrend. And one day that'll break, and then we'll take a look there. So that's basically it. Know your time frame, know your risk, know your commitment. A lot of leaders got beat up. If you had high-level stops, you made money. If you had lower-level stops, you saved money. If you look at Zynga, I know I bought a little bit today on that Facebook news. This stock has been a disaster. If you take the name Zynga off and you just look at it technically, it actually really acted well. You look here, this was your buy, here was your add, okay, and then it wedged again, gave you a nice entry, okay, and then it broke out, gave you a shooting star top, which is a sell signal, but people try to ignore it, saying, oh my goodness, Facebook's going to come out, it's going to be $20, we should ignore this, including me, but we did sell some, and then, and then it started to break this more macro wedge, right, if you go like this. So that was your sell signal. This was also right around the secondary, right around 12. So once it broke this 12, this was a way out, which, I think I took down some size, but then here's when I got stopped out on this day. And if you got stopped out at 1140, you saved yourself some pain. So now you look at Zynga, it's trying to reverse, first little green bar. There was some news that it's about 11% of the revenues of Facebook. Maybe that's enough versus support. If you look at the volume today, if you go to basic studies, put your volume in, you will see some decent volume today. So I am long Zynga. tier 1 and change versus a low of 858. It's very oversold. Maybe it gets to move back to $10 and that's it for that. I don't want to get overly into Zynga because the stock has been gross and it's lost people money, and I apologize, but it could have been worse. Booking losses is good. Sticking around, cost averaging into a disaster is not prudent. So with all that said, we bounced off the lows. We could fill a little bit of the gap in spiders tomorrow. I still think that, I guess, like I said on Friday, I'm like, if someone kidnapped me and said in 2 weeks from now, are we going to be higher or lower? I still think it's lower. There'll be trades along the way, and just keep taking them and keep putting together a nice plan each day, because the market is very tradable, both long and short. You just have to make sure you know your entries and exits and know your risk. Scott Riley, T3 Live, recap, see you at the morning call. Tomorrow with Brittany. Have a great night.